people are going to be inclined towards whatever's the stronger money, especially if it's of a similar or faster speed than the weaker money. So you can imagine everything is dialed up. Everything is, the prices are on average going up a lot quicker. Even banking access is lower. So fewer people have access to banks to even earn interest to partially offset the devaluation that's occurring. We are actually benefiting from that devaluation of that currency. And that's happening in 160 different currencies around the world to different speeds and different levels and different opportunities.
For 80 years, the United States dollar has dominated all other currencies. But a grouping of developing countries tired of the West's looming presence over global governance and finance is determined to take it down a peg. Lyn Alden, a macroeconomist and investment strategist, observes that the modern era has seen a trend toward centralization and rapid money supply expansion, resulting in currency devaluation. A mutiny is occurring in the global currency market, with many countries ditching the US dollar in favor of China's yuan. According to data from the IMF, the US dollar accounted for 59.17% of global allocated foreign exchange reserves in the third quarter of 2023. Meanwhile, the Chinese yuan, which many think is the biggest threat to the dollar, accounted for just 2.37% of reserves in the same period, with a high proportion of that being held by Russia after the US retaliated to its invasion of Ukraine with heavy sanctions. The data shows the greenback's share of globally allocated foreign exchange reserves has fallen by around 6% since early 2016. Alden stresses the significance of individuals leaning towards stronger currencies. She echoes the historical parallels between gold and the dollar, highlighting Bitcoin's distinctive features that render it an attractive option. El Salvador's renowned Bitcoin-friendly stance has persisted over the years, led by none other than the pro-crypto president Nayib Bukele. Since becoming the first nation head to integrate Bitcoin as a legal tender, Bukele has continually charged optimism for the asset class, promoting adoption among the El Salvadoran population and establishing accommodating regulatory standards. Now let's delve into the video. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
If you look at the history of the dollar, it was defined in 1792. And from there all the way up until the early 1900s, its purchasing power remained unchanged. It could buy the same amount of gold, it could buy the same amount of general goods and services based on most estimates. During wars, there'd be some period of inflation, but then it would kind of revert back after the war. And it wasn't until this more modern era where we began centralizing everything and growing the money supply on average at a faster rate that we started to get this devaluation. And to your point about who it affects or who it helps most, basically it's kind of the economy is kind of like a game of blackjack, where with blackjack you want to get close to 21, but you don't want to go over. And the way that who best is rewarded in this economy is people that have debt, but not so much that they blow up in a recession. So if you have long-term low interest rate debt and you're using it to buy scarcer assets, real estate, business, cash flow, business equity, things like that. The closer you are to the source of money creation, you're shorting the fiat currency that everybody else is earning their wages in and saving their near-term money in, and you're buying scarcer assets, and you're doing very good, especially because you have global arbitrage. You can short one currency and buy assets somewhere else, for example. Whereas if you're on the other side of the spectrum and you don't have a lot of access to credit and you're just kind of earning wages, you're saving a little bit, you're getting constantly devalued, you're getting paid in melting ice cubes. And so that's kind of the divergence we've seen over the past several decades, which is that it's very kind of challenging. And in the United States, we've had it still pretty good. For example, I spend part of each year in Egypt, and they have 20% annual money supply growth. And so you can imagine everything is dialed up. Everything is, the prices are on average going up a lot quicker. Even banking access is lower. So fewer people have access to banks to even earn interest to partially offset the devaluation that's occurring. So if you're on the bottom of the income spectrum there, you're literally dealing with cash. You're getting paid in cash, whatever small savings you have are in cash, and that's literally inflating away at 20% a year on average, year after year after year after year. While if you're fairly wealthy, you might be shorting the currency. You might be, buying real estate with a multi-year loan at pretty low interest rates, or you might be doing some sort of arbitrage, for example, where you're actually benefiting from that devaluation of that currency. And that's happening in 160 different currencies around the world to different speeds and different levels and different opportunities. And I think that basically we spent the last several decades financializing the economy. And I think that some of these technologies allow us to shift that pendulum back a little bit towards, in some ways, less financialization and more real world building, and kind of sending the incentives back towards those who earn and save. People are going to be inclined towards whatever's the stronger money, especially if it's of a similar or faster speed than the weaker money. So, for example, over the past century, the biggest comparison was, say, gold and the dollar, whereas gold obviously held its value a lot better than the dollar, but the dollar had various advantages of speed and convenience. And so, even though the dollar was weaker, it was still stable enough that, especially when you combine, legal monopolies and legal tender laws, things like that, that the dollar was able to win out. One thing that's interesting about Bitcoin is that it's over the long term, it grows even less than gold in terms of new supply. So it's even scarcer than gold, and it can move around as fast or faster than fiat currencies can.
Digital assets have revolutionized the financial world, offering once unimaginable investment opportunities. As Egypt still seeks a way out of its grinding foreign currency crunch, Oxford Economics has predicted that the value of local currency will drop somewhere between 55 per dollar and 60 per dollar by the end of the year, if regulators switch to a flexible exchange rate regime. Alden underscores the global relevance of Bitcoin and stablecoins, offering solutions to individuals facing currency devaluation and financial restrictions in diverse economic landscapes. Buenos Aires is Argentina's capital, a country experiencing high inflation and currency devaluation, making Bitcoin an attractive alternative for saving and transacting. Buenos Aires has a growing Bitcoin adoption, with many Bitcoin ATMs, businesses, and organizations. Now, let's redirect our attention to a video.
I'm in New Jersey as well. And so we have the benefit of pretty good money as far as global monies are concerned. And we have the benefit of a good housing market and S&P 500, right? So our money's not as broken as others, and our savings, we basically monetize the equity market for our savings. That's what a lot of us do. And so it's easy for us to look around and say, what's the purpose of Bitcoin? I think when you look at the use case for it, you have to look at the global marketplace. There's 160 different currencies out there. And many of them do not have attractive equity markets or real estate markets for people to invest in. The question of liquid savings is very hard. I have a friend who's a physician in Egypt, and he literally stacks physical dollars like under his mattress as part of his savings because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency. So it kind of comes down to, he's got a little bit of real estate, but that's illiquid. And so it comes down to dollars, gold, and assets like Bitcoin and things like that. And so another complicating factor is that, let's say, for example, if I send money to a graphic designer in country XYZ, maybe it's Egypt, maybe it's Nigeria, maybe it's Argentina, they often will receive it in their local currency at a fake exchange rate, and they still have the problem of, what do I keep my savings in, or how do I make sure I raise my prices each year in line with the monetary debasement that's happening. And one of the cool things about Bitcoin, or stable coins for that matter, is that I can send them the money that they prefer around their local banking system. As long as it's not a sanctioned country for me, right? So, for example, I would not send money to an Iranian, even though I would have the technical capability to do so. I wouldn't take that risk as an American. But for example, as long as they're in a country where it's fine for me to send it to them, we can go around their local banking system, which is the problem. I can send them stable coins, or I can send them Bitcoin over a call like this. They can hold up a QR code and I could send it to them. They could send me a DM or an email saying, here's how to pay me. I can pay them. And then now they're getting their full rate, and they're able to save it. They're able to bring it with them should they leave their country, which, as Americans, we don't really think about leaving our country. But if you're in Lebanon, if you're in Argentina, if you're in Venezuela, like I personally know someone who moved from Venezuela to Canada, and he brought Bitcoin with him, whereas many other Venezuelans just leave penniless, as they try to flee, because it's very hard to actually bring value with you outside of countries that have that problem. And so I think that the main answer I would say is, think globally and think about a kind of a board with 160 different currencies. Most of them are rapidly devaluing. Most of them have capital controls to varying strengths around them. And things like Bitcoin and stable coins give people more options to self-custody money, to receive money they want, to go around financial borders and things like that.
In a remarkably frank talk at a Bank of England conference, the managing director of the International Monetary Fund speculated that Bitcoin and cryptocurrency have as much of a future as the internet. It could displace central banks and conventional banking and challenge the monopoly of national monies. Christine Lagarde, a Paris native who has held her position at the IMF since 2011, says the only substantial problems with existing cryptocurrency are fixable over time. What is your stance? Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.